So AstraZeneca, tell me about it.
Okay, AstraZeneca, market cap, because our data is now updated. Market cap, $130 billion. We have a PE of 41, that's an X. Profit margin of 12%, that's a check mark. Huge gross profit. Now, I'm gonna say something here, guys.
Go ahead.
I wanna make this bet, and I wanna see if I'm right or not, that there was a big drop in profit last year. Because this seems like a low profit margin for a drug company with 80% gross margin, and 41 seems pretty high for a company like this, especially since it's off its peak, but we'll see. 2.8% dividend, and that costs them $3.67 billion a year. Guys, keep this in mind right here. I'm not gonna skip ahead too much, but they paid $3.7 billion last year in dividends. Now, let's go to the income statement. So far, we have one X and one check. Income, revenue, 23 billion, 26.6. Check mark there.
Okay, check for revenue growth. Pillar number 4 is profit growth.
I was wrong, 3.5 to 3.2. It is an X, but it did not drop at all. It's actually, it didn't drop a lot at all. So I was wrong on that one. So maybe it's just really expensive.
Shares outstanding is pillar number 5.
Another X, 2.53 to 2.62. Jesus Christ, what are these people doing?
They're selling off the money they don't make. Current assets over current liabilities, pillar number 6.
18.2 billion versus 18.9 billion. So they don't have enough cash on hand right now to pay their current debts.
This doesn't happen often.
No, it doesn't, especially not with a company like this.
So they're underwater on current assets over liabilities.
Cash flow. All right, guys. Here's where we have an issue. If you remember their dividends, look at their dividends paid last year. 3.57. Here's the interesting part, guys. Look at their dividends over the last decade. I wonder if this is right, because these are really high dividends, and over $3 billion each time. Look at their 5-year free cash flow. Never once above $3 billion. Not one time.
Are they promising a dividend they can't pay?
There's a check mark, by the way, to the dividend, to the free cash flow, but their average is only 1.6 billion. Times even 20 would be $32 billion. And their market cap was 130, right?
Yeah, 131.
4 times more?
Yikes.
So guys, I don't know how they're gonna afford this. They have to take on debt. There's only one way, there's only 2 ways to pay dividends. Out of your cash on hand, or debt, if you don't have the cash flow, So I look at it going, their free cash flow is garbage. They haven't had enough free cash flow in the last 5 years to even pay 2 years of dividends, I don't think. Yeah, that's bad. So, AstraZeneca.
AstraZeneca is currently priced at $49. It hit a peak last year in summertime of 61. The COVID drop was 39. It's currently at 49. And 2018, it was 35.
And look at their revenue over the last 10 years, as somebody said, 33 billion down to 26 billion. Wow. So what's their pipeline like? Guys, I'm more concerned about how their dividends can't even be supported by free cash flow. They don't have enough money in their free cash flow to pay a this is an example of a company that's probably looking at saying, we've got to keep this dividend going or else it's going to be a problem.
Chris is saying, are they borrowing money to pay for the dividend? How is this possible?
Let's look. Let's look at...
While you're doing that, I'm looking at it from a qualitative standpoint. I'm looking at their pipeline and whatnot, and it's just weird that they got into the coronavirus stuff. There tons of oncology. They do some renal, some cardiovascular. Then there's just like random coronavirus and vaccines. They do COPD, this and that, asthma. To me, I look at it saying they were able to produce a COVID vaccine, which is really not their wheelhouse, and they did it effectively, and they came out as one of the big ones. Moderna threw all their focus at it. Pfizer they're the virus people, so they have the background. Johnson & Johnson just does everything.
Now, renal is something to do with my butt? Or
kidneys.
Kidneys. Okay, same thing. Keep going,
That's, I'll just stop. But I look at it saying, besides this, of course we have to take this into account, but I'm looking at it saying from a qualitative, maybe management standpoint, it might be something to keep an eye on going forward if their fundamentals can change. Go ahead, Paul.
Okay, so remember, guys, I'm not trying to be negative Nelly. I'm not trying to frustrate you guys with, when are you ever going to like a stock? That's the point. There are 10,000 stocks out there. If you do this over and over, you will find 20 or 30 that work for you. Trust me on this one. What I'm trying to do is teach everyone how to be patient and say, okay, I will wait for the right time. because the right time will appear at some point in the future, and I'm going to save along the way my other ways, putting in index funds and all that stuff. But my 10% of my money that I'm going to manage myself, that could increase over time, I'm going to sit there and be patient. Being patient and learning is a wonderful thing. Trust me on this one. It sounds boring, but it's the whole old adage of, Grant Cardone in his moronic behavior says 6% is better than 0%. I disagree. 6% is not better than 0%. 6% with a downside risk of 70% is not better than 0%, never to go below zero until you find a value that's right for you. You have to remember that we're trying to teach discipline here. We're trying to teach a mindset. The numbers part is the easy part. Guys, these numbers are easy. They're just spit out. It's all the easy stuff. The question is, do you have the ability to be disciplined and say, you know what? This looks crazy. I'm going to avoid this. I'm not going to do this. Okay, great. More power to you.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.